Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro make another push up. We are getting some European data, at least according to me. It should be coming up at the top of this next hour, but it's actually coming out now. Eurozone money growth showing here. It should be not 4 a.m. Eastern, but 4 a.m. Central, which would be another hour later. But it's showing it's coming out at this time. We did get a Eurozone economic sentiment numbers. Once again, those are just released now. 7.5%. Also, German Brandenburg is staying here on the squawk out. But I've got Eurozone economic sentiment, and you can see here the euro still continuing to push. And I'm trying to see if that. I'm not seeing that Brandenburg data. I'm checking, bear with me. Yeah, it says that German Hess data is also out, and I'm not seeing them going through all my data information here. Bear with me. But that German's Hess data did not pop up for me. But once again, we did get Eurozone money growth, 7.5%. We also got economic sentiment. Well, actually, that's coming out. So that is due. I don't know why they had this Eurozone money growth at the top of this next hour, but it did come out along with loans to households coming into today. German CPI is going to be out at 8 a.m. Eastern. And we do get GDP today, advanced GDP. As well as pending home sales. And then we do get FOMC today. Bavaria, Brandenburg, and Hess data came out, but I didn't see that come up on my screen, on my Reuters screen. I did go and look. Anyway, a little bit weaker is what they're saying on the squawk. We are seeing the euro trying to make another push higher here. Dalian has continued to weaken here. Really, we saw a sell-off in the equities, and then the sell-off abated. And then it wasn't until late in the afternoon when the equities took another push that we started to work a little bit lower. And then in Asia, we were even lower at this point. Aussie dollar continues to go on and push higher here. And we'll just take a quick look at equities. kind of taking a pushback up here again. You know, yesterday I was saying I wasn't interested in shorting it unless we came close to around that 28.90. And yesterday in the Asian session, I did post I got shorted 28.94, and then I added it at 2,900, which was a 78% of this move. We came back down, not as much as I would have thought of, and I wanted to go to bed, and I was able to just jump out of both of those. And we did push all the way up here to 29.04 and a half, or actually 29.04 and 3/4. I remember someone asked me yesterday, hey, if we push higher, how high do you think? Now that's before they totally collapsed. And I said, even if they could push higher, I don't think they'd get beyond 29.02 to '05. And I guess that's where they ran out. The only reason I wouldn't mind hanging on, if it wasn't for FOMC, I thought that might kind of try and push them a little bit higher. They had some tricks up their sleeves now with stepping into muni bonds and some other stuff. I had a good article from Wall Street Journal. So, but I think they've got some people under the box right now, because after that slide yesterday, you can see here the 78% here. Probably a lot of people that were like, oh, this thing is, which I was saying myself, I go, it's over, which I do believe it's over. But I'm saying is that I think they may have, because remember the rally only made it, actually came all the way up here to look 28.80. And I was more interested at the time. I said at 28.84 at least. That's where I wanted to come in, preferably 28.85. But 28.95 was actually a good little volume area on this bookmap chart. And so that helped me, because instead of, and I saw it kind of work a little bit higher, I said, I'm just going to wait and wait. And I thought about the 28.90, and I thought, no, I'll just sit over there at 28.94 and see if it gets filled. And we saw like a spike up real quick. You can see right here where they just kind of gapped up. You see here how they jumped and hit little gaps. And then I got filled in there. And we kind of bounced around. Wasn't anything of any real great substance. Fortunately, I was able to get a scalp off at 2,900. That helped me. But I thought we were going to break lower to at least 28. At the very worst case, 28.88. And I mean, we've dipped lower now, but I mean, not before it went all the way up to 05. And but those folks that shorted it, let's say in the 28.70s, 28.80s, lower 28.80s, pretty much in a little bit of a hole, other than we almost made it all the way down here to, I guess, to about 28.83 and a half or so. But we do have the Fed. I still think overall the move is over, but I think they may have got a little bit oversold and they popped back up here. I'm surprised we made it all the way back up here. I wouldn't mind taking a short up here when it got up here to almost 5 if I was up at that time, but I wasn't up. You can see gold getting whacked a bit here. Crude oil at almost at $14. With that, we'll just go on and move into the news. So the Australian dollar reaches a 7-week high and recoups all of the pandemic plunge. This Australian dollar has been something else. Um, The Australian dollar climbed to a 7-week high on Wednesday, with its New Zealand cousin not too far behind as optimism about progress on opening economies globally whetted risk appetite. A surprisingly high reading for Australian inflation added for extra Philip. Um, though a drive into deflation is likely this quarter as the impact of the coronavirus is lockdown is fully felt. The Aussie rose to 65.27 for 6 straight sessions of gains. That took the currency back to the level of early March before the panic over the pandemic sent it crashing more than 10 cents to a 17-year low of 55.10. The Kiwi added 6 tenths to 1694 and was nearing the top of 61.31. The odd continues to push ahead, in part because of a declining volatility in other asset markets, said Ray Trill. Though the run-up this month has extended far beyond what the improvements in risk metrics most pertinent to the odd would justify. He said the Aussie has surged 6.3% on the US dollar so far in April, outpacing all of its major peers. This is quite extraordinary, as does leave us a little cautious about the near-term outlook, especially as the calendar clicks over into May. The rally has prompted NAB to revise its longer-term forecast for the currency, which now sees reaching 67.50 by year-end and 72 by the end of 2021. The Australia's successes containing the virus has helped the Aussie rise, though the economic damage done by the lockdown is yet to fully show in the data. Figures out Wednesday show inflation had picked up to a 5.5-year high of 2.2% in the first quarter, finally taking it back into the RBA's target base of 2 to 3%. However, that progress is likely to be entirely wiped out this quarter as large parts of the economy shut down and oil prices collapsed. The demand shock from the virus crisis is about to plunge Australia into a deflationary world, a world experienced by Japan and Europe in recent years, said Ryan Feisman. That huge impact of the economic shutdown will see deflation persist for a few quarters. This unwelcome outlook is a major reason the RBA has committed to keeping cash rates at a record low of 0.25% for the next 3 years. So the dollar slips ahead of the Fed meeting and GDP data. The dollar eased on Wednesday as slowing spread of the coronavirus and moves to reopen economies encourage investors to favor riskier assets, though there was caution ahead of the central bank meetings in the U.S. and Europe. The dollar has tracked risk sentiment closely across the coronavirus crisis and was broadly softer on other majors on Wednesday, slipping a fraction against the range-bound euro, while the yen strengthened to 0.3 to a 6-week high of 6.55. The Australian dollar rose about 0.6 to a 7-week high of 65.33, a 6 straight dollar gain that is tracking toward its best in month in 4 years. Public holiday in Japan and caution ahead of the U.S. Federal Reserve meeting ended later in the global day, and the European Central Bank meeting on Thursday kept currency markets subdued. No wonder it was so quiet. Well, I noticed yesterday, when I shorted the SPOOs in Europe, and it seemed really quiet. Remember I mentioned about those gaps. No wonder I didn't realize that Japan was on holiday. Investors will be watching for clues on the Fed's future policy path after responding to the economic devastation of COVID. There's no expectation the Fed will change policy, said Joe Capurso. Capurso said Fed's view of the extent of the economic contraction caused by coronavirus and how long it might hold rates at emergency levels will be of key interest to investors. The Fed is due to issue a statement at 1800 GMT. But before that, quarterly GDP numbers will be released at 12:30 GMT with consensus forecasts for a contraction of around 4%. Data released overnight showed U.S. consumer confidence slumped to a 6-year low this month. Cases of COVID, the respiratory illness caused by the virus, topped 1 million in the United States overnight. The Aussie has soared, rising some 6% on the month and 18% from March 17th. With that, we'll just go move into the analysis. So the euro challenged the bias chart resistance but paired back as risk aversion came into the US session. The pair closed above 8. Support remained 776 with resistance at 870. And here we are back again. Currently at what? Well, currently right here at 870. So no changes here. 870, which is, they actually got above 870 and then look how they fell back. Now they're kind of reasserting themselves. Support remains 776. I was going to just tighten it up a bit to 792, but just kept it there. Obviously, with the ECB coming up, we'll certainly see some pushes against levels. And onto the cable. So cable challenge 25. Challenge the 25 level, getting as high as 25.20. Remember, our bias chart resistance was 25.02 before weakening. The pair defended 24 even. Resistance remains 25.02 with support at 23.67. So we've tightened up the support. Remember, we had resistance at 25.02. It did get up as high as 25.20 before sliding back in the U.S. session as risk came off. Moment. Oh no, we do have it here, 23.67. So that's going to remain the same. We're going to move on into the Aussie. This Aussie's been something else. So the Aussie continued to push higher, albeit in a tight range. Resistance remains 65.07. Well, we've now pushed beyond the 65.07 finally. The day before, we did get up as high as 65.13, and we closed at what, 64.81. Now we've even pushed beyond that. Yeah, right here at 65.69. We're going to have to respect that level. This thing has really had an unbelievable run. And we were able to get above, at least for right now, above the 65.07. We've gotten as high as 65.50. It's going to be 65.69. Just have to respect the level. And support is going to be right there, which coincides with the prior day's low, which is going to be 64.43 for right now. And let's go and move into the Kiwi. So the Kiwi closed just below resistance level 60.77. The sister pair Aussie also continued to move higher. Resistance will be 61.10 with support at 60.04. So we'll go with the 61.10, although we've gone as high as 61.18, but we'll stick with that 61.10. We're just at, right now we're at 60.99. So 61.10 is what we said. And we do have to change this to bullish. Because remember, it's recovered all of its COVID losses. Not here yet on this one. We'd have to sustain a higher move on the Kiwi. And then support we said was 60.04. Look at the dollar CAD. The dollar CAD continued to weaken on Tuesday. Support remains 39.23 with resistance at 40.91. So we've actually hit 39.23 today. Finally hit it. So 39.23 and resistance 40.91. That might be a stretch in here at this point now. It's going to be right there. You see the bottom part here, confluence with yesterday's high, which is going to be 40.72. Let's go to the dollar peso. So the dollar peso lost support level 24.62. Support will now be 23.97 with resistance at 24.60. We had talked previously where support, remember here we had it for 24.12. Looks like we found support around that area. Let's see, the low has been actually 24.09. But we have once again allowed it here to drop lower because in this break, how much further can they push now that they lost 24.62 and we're going with 23.97. And resistance, if they could come back up there, would be 24.62. If for some reason we see them jump back up there. Let's go move into the dollar yen. So the dollar yen broke lower as equity sold off. Support is now 628 with resistance at 675. And we've just about tagged that level there. Low today's been 633. So support is now going to be 628 for today after we finally broke lower. With resistance at 675. And we do have two daily closes below the 693. Well, not a daily close yet. But we'd have to go with a bearish now. It's been hanging around, and now we've rotated lower. Now, actually, you'd look for the lows here. And on to the dollar index. The dollar index posted a minor hammer after dipping to 99.45. Support is now going to be 99.25 with resistance at par 50. We'll have to see with now the Fed and the ECB will probably be dancing all over the place on that. So support is going to be 99.25. Still bullish overall. And we said par 50. We can just leave this par 48 right there. 2 ticks isn't going to make any difference. With that, we'll go and move into the Kiwi yen. We're still trading in a relatively tight range here in the Kiwi yen. The yen started to strengthen, but then again, so as the Kiwi continues to strengthen, so very, very tight range. Resistance is going to be right there, which is 64.96, which is exactly what we already have already. You can see there, 64.96. Support, on the other hand, is going to be right there, 64.36. We actually had 64.04. We'll tighten it up. Looking here with the euro yen. Continue to weaken here. $15.75. We're actually below that. Right there. 15.67. 15.67. Well, that's support, so it's going to be 15.67. See whether or not they can hold that. Actually been as low as 15.50. Holy smokes. We'll just go with the day's lows. I mean, this thing is coming into some good support already, but we'll go with the day's lows of 15.50. And resistance is right there. 15.96. Called 1603. Let's go move on to the euro on. This thing really continues to push lower. Here's the 6610. We have been as low as 6581. Trying to put up a little bit of a hammer. 6610 is a key level. We're just going to go with today's lows, which is going to be 6576. There's resistance 6672. Looking at the daily, I don't know how much longer we can consider this to be bullish, even though it did break out. It needs to hold this area here to still retain. It is bullish in the sense, if you look at the overall daily pattern, it has to hold this area here. 2 consecutive close below 6610 will turn it to bullish. Let's go to the Euro Kiwi. You can see the support level right there, 77.52. Boy, Euro is really taking a bath against this Aussie and Kiwi. Looking at resistance, immediate is 78.87, which is actually the high, 78.87. And let's go into the ASEAN. We've just about filled the gap. Actually, we did fill this little gap here. Well, you can move from here, but I'm saying right here at this low. Maybe we finally will tire out, which that's 69.58. We did push up a little bit higher so far, but we'll say that's resistance 69. Let's call it 69.59. There's support right there, 69.04. Guppy sliding back again, but we do have some good solid support coming in here, which is 32.42. We've actually been as low as 32.38, so 32.42. That will be resistance. 32.91, 32.92. Everything's trading fairly quiet. Things have really quieted down to a certain extent. And lastly, let's go into the sterling node. Right there, trying to support 90.61. And resistance will be 91.36. See, Euro's still hanging around this 870-ish area here. And everything's quiet. I think everything's going to stay relatively quiet. We do have GDP, US GDP advanced. And we have FOMC, tomorrow ECB. So I'm not seeing anything that's of any real significance, big change. I mean, we did make that move all the way up to 29.04 3/4. Which wasn't, well, that part was a surprise. I thought would make it around 28.90. And we're still trading back up in here. Certainly those folks that did go in short or waited too long, I should say, to go in short. Because we stuck around here for the afternoon, but if they hung around too long, kind of got themselves stuck. Although I still think overall the rally's done for. Once again, we'll have to get past the Fed today. We do have a, if you can look here, a little bit of a Greystone doji from yesterday. But that's all we have for today. Good luck, and we'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.